Full disclosure, so you know, the trend is still higher and short term. I'm long right now. I hate the market, but I'm still long. I'm not going to fight the tape, right? I'm not going to fight the trend, and I'm always long in my IRAs and my 401k. I'm just hedged there, so I never worry about that. But short term, I'm long the futures right now. Okay, but I know in my mind that this market's getting ready to collapse. But of course, I'll have plenty of time to reverse out and go the other way.
Todd Bubba Horwitz joins us today. He is the Chief Market Strategist of BubbaTrading.com. Bubba, good to see you again. Always good to have you back.
David, it's always a pleasure, and I love the new show. It's great.
Thank you very much. Let's talk about the markets. You were telling me offline that you still don't like it. If you strip away all the tech stocks from the S&P 500, it's been flat on the year. And so the underlying economy isn't that great. Or is it? Tell us about your views in the market.
I think we'd be down, but again, you can't strip away, right? We have to look at the overall tape, and the overall tape says the markets are still kind of climb higher or climb the wall of worry. But when I look at the underlying factors and I look at the economy, I think we're in a recession. Now, people won't admit to it, the economists won't admit to it, but when you go to the grocery store and you're paying these ridiculous prices for food, and you go to the gas station and you're paying ridiculous prices for gas, to me, that's a recession, because people are not making enough money to overcome the more added costs that they have to pay. In fact, if you look at the gross domestic income, it is a recession. So we can't keep hiding from it. And basically where we are now is in 1776, we went to war for this taxation without representation. So the economy is in real weak shape. And I think we have a big greed factor going on in this market right now, because if I told you 5 years ago, I'd give you 5.25% on a CD, people would have jumped at it. Now they're saying, I don't need a 5. I'm going to make more in the market. Well, we all know how that always ends. It never ends different. It always ends the same way.
If bond yield, that's a great point. All right, so 5.5% on the CDs. Shouldn't you see at least 5.5% returns on the equities?
Well, you normally, the equities return 8.5% year over year. However, we've been up dramatically, and we're really been fighting to be higher this year. And, when you look at the bigger picture, the equities are due for a little bit of a cycle change. And again, that's normal. That is actually healthier for markets to see some dramatic selling. We shake out the weak and come back with new money and strong. We have not seen that. All we've seen is a slow grind higher, or a consolidating market that has worked its way higher through all the troubles and all the problems, which is fine. But overall, it will come to a head. And the banks are in trouble. They're over leveraged once again. This is not a new story. And they're able to hide that through the Federal Reserve and the nonsense that they play.
Right. Just today, this morning on the 8th of June, jobless claims came out, and this week's data was worse than expected. Jobless claims totaled 261,000 for the week ending June 3rd, an increase of 28,000 from the previous week. Now, this is potential sign that the labor market is softening up, some reports say. What is your read on this number?
David, the labor market is horrible. The jobs numbers that are reported are totally crap. Okay, look, there's different metrics in which you can use, and the government chooses to use the U3 because it does not show the people that have left the workforce, that can't find jobs, just gave up. Okay, they should be using the U6. That is a much more cleaner version. One is 3 months, one is 6 months. And you have a phony look at these jobs, because at the end of the day, we're getting layoffs. You've got Facebook, you've got Amazon, you've got Meta, you've got Apple, you've got Dell. They're laying off like crazy. So where are all these new jobs supposedly coming from? This is a total crock. But again, depending on how you report numbers, and that's why government numbers are not good numbers, because they're influenced and they're always readjusted the following month. So they'll overcome the lie they told us this month will be corrected next month quietly. The only real good numbers to really watch are ISM, which are private. And of course, they're telling us that we're in a lot of trouble. Manufacturing is no good, and we continue to lose ground on services.
Now, this comes a week before the FOMC meeting next week. The stock markets are kind of flat. Gold's up today. We'll talk about gold and the dollar in just a bit. But generally speaking, I don't think the markets are interpreting this as terrible news. Perhaps they're forecasting or signaling what the Federal Reserve may do next week. What do you think they're going to do?
Well, I think it's a very confusing issue here. I think we've seen the Fed funds rates float back and forth on yes, they're going to hike. No, they're not going to hike. They're going to continue to hike. Now, whether they take a pause in June is the question. Now, with the last jobs number, which, I don't put any stock in it, but of course, the Fed can justify hiking rates because of a strong jobs number, right? I think they'll probably stand pat here and start raising again in July. The 10-year is getting to 6%. Okay. And so I think there's no doubt there. We can look at mortgage rates, you look at other rates, but they may give a pass. But if there's any more strong economic data that comes out between now and next Wednesday, they'll probably hike.
You said they might hike in July, so they might pause June, but they may hike in July. Why would they hike?
Well, they're going to continue hiking. They're not. This is far from over. Inflation is far too hot. Again, food and energy. We don't count food and energy as part of the inflation cycle. It only counts as 4% of the CPI number. However, what is the number one cost for the average person other than a major emergency in their home or something? Their number one cost is food and energy. And again, that's eating away at the paychecks of the American people.
Well, do you think that if the Fed just leaves the interest rate alone and just doesn't touch the Fed funds rate, that inflation may fix itself? Because during a recession, inflation usually comes down. Do you think that may happen?
Not a chance. This inflation is far out of control, and this was more a manipulated inflation by the current administration. And I don't want to talk politics, but when they took away the exporting of oil and they stopped producing our own oil, fossil fuels represent 80% of everything you do. Okay, no matter what it is, whether it's a bottle of water which is made with oil, whether it's the shipping and receiving of those goods. Again, when you change the price of oil from $30 a barrel to $75 a barrel and probably going a lot higher, that directly affects the bottom line of people that are buying it.
All right, well, let's talk about markets again. How do you feel about the tech stocks that has been leading the charge?
Well, I think they've probably gotten a little bit ahead of themselves. We always get so excited as investors or as traders and thinking that they can never go down again. We've seen some mighty, mighty big moves. Now, I'm not saying it's over today, but I would think that the NASDAQ is coming very close to a head. This has a very big reminder of the 90s and just seeing them go crazy. I mean, when did you ever think Microsoft would go up 10% in 2 weeks? Okay. And you watch these crazy moves because of what's going on. And of course, people forget the real metrics that a company's got to make money. And if you push it too far, it cannot make enough money to make the valuation. And that's one of the problems I think we're going to see.
As an investor, are you jumping on this AI trend at all? Are you buying companies that are producing chips or using AI or somehow just utilizing this theme?
I'm probably buying them not knowing that I'm buying them, but I'm not targeting AI. I mean, certainly I own Apple, so that would be one that is involved in the AI. I mean, I own some, but I'm not specifically looking at the AI because it's an AI stock. I'm going to buy it. When I'm buying something as an investment, in my mind, it's got to be in business to show it can be in business forever, and they make a profit. And I don't buy for an investment on speculation that maybe they're going to be good. Okay, this is the mistake that people made in the 90s. Again, the company has to make money, and if they don't make money, I'm not buying it until they show me they can make a profit.
Okay, there's this new age way of thinking that a company has intellectual potential down the line. I remember Tesla wasn't making money for years, yet valuation was almost the size of Ford.
But you had plenty of time to buy Tesla when they started to make money. Okay, you had plenty of time to get in. Look, we can go back to what they just said in the 90s. New economy versus old economy. Put a .com next to it, it's immediately worth $1 billion. Well, guess what happened? All those companies went out of business. There were some survivors, but the big mass, people went broke, companies went out of business. And again, if they don't make money, okay, and they don't show the potential to make money, there's plenty of time to buy when a company shows you that it has the ability to make a profit. Until then, anything goes. And if money goes crazy, what do you think these companies that are borrowing all this money are going to do when interest rates go to 8%, 9%, and 10%?
I have a question. What if you have a company that may or may not make money, but everybody, all the retail investors, maybe even some institutional guys, love it for some reason, and they're all jumping onto this one stock or one trade or one sector?
I'd sell it. I'd short it.
You wouldn't jump one with them.
I would short it. Okay. I would sell it is with both hands. You show me a stock like that everybody's jumping on board, I'm going to give it to them. Okay. As much as they want. Or as the old floor trader mantra used to be, I'll sell it till my hands bleed.
All right. Okay, we got to talk about the debt ceiling deal. Markets were jittery a couple weeks ago because they weren't sure exactly which direction they were going to take. People knew it was going to get passed, but not exactly how. So it did get passed. Now, would you say that the underlying issues of our debt and deficit are fixed now because the debt ceiling has been raised again?
Absolutely not. This is a crock, David. Goes on every few years. We go through this hemming and hawing, and everybody's wiping their brow. Oh my God, we're going to default. I want a default. I'm tired of spending money that we don't have. Okay, I want to see a government that is fiscally responsible. And again, this is not a Republican or Democratic issue. They all raise the debt ceiling. And in fact, it is my opinion that they sit in a room as they come out in public, all worried, fighting, and they sit in a room with a bottle of scotch and a cigar, figuring, how are we going to screw the American people today? How are we going to tax them more to pay for all this garbage we get? And it's nonsense. There is no reason that we should be at this point of a deficit without overspending. Government and the Federal Reserve don't make money, they make debt. The American taxpayer pays all the crap that they do.
I'll just read you this paragraph from an op-ed from Robert Reich. He says that to the debt itself, neither party really cares about it. Although doubling from $15 trillion in 2011 to $31.4 trillion now, it has not had any obvious negative effect on the economy. Is that true? The debt has gotten bigger, but it's not really. The economy hasn't gotten weaker because of it.
Well, I'll ask you this question: if you're making more money, but you're spending more than you're making, does it have an effect? I think it has a dramatic effect. They continue to tell us that it has no effect, but ask somebody who's on Social Security, whose cost of living, the COLA, doesn't keep up with the cost of inflation. The inflation, there's two types of inflation, one good, one bad. The one we have now is the worst because it's government created and it's BS created versus a solid demand for product. I mean, you can't get, if you need help, you can't get it. And every good company is laying off help. So how are we going to pay for all this? All it means is more taxes for Americans. And again, as I said earlier, in 1776, we went to war for this very issue. Okay. Taxation without representation. That's what this whole bullshit is. Oh, sorry. Excuse me. That's what this is about.
It's fine. All right. Todd, what is the point of having a debt ceiling then if they're just going to raise it every time? I don't know the legalities of it, but I wonder about this.
Well, there is no point for it, to be honest with you. It's just nonsense. I mean, again, if you're not going to live by a real budget, if you and I lived the way that the government lives, we'd be in bankruptcy court or jail. Okay. They don't have to live by a real budget, and they have the ability to create money, which is the Ponzi scheme of the fiat fraudulent currency system that allows you to devalue a currency, add more dollars. So what are you really doing? You're just shuffling paper, which is really why they're going for this digital currency, because it makes it easier to maneuver it.
Okay. So bottom line, you're not hot in the stock market right now. In fact, you told me offline that you think we've still got some downside left.
I think there's a lot of downside. Now, listen, I mean, full disclosure, so the trend is still higher and short term. I'm long right now. I hate the market, but I'm still long. I'm not going to fight the tape, right? I'm not going to fight the trend. And I'm always long in my IRAs and my 401k. I'm just hedged there, so I never worry about that. But short term, I'm long the futures right now, okay? But I know in my mind that this market's getting ready to collapse. But of course, I'll have plenty of time to reverse out and go the other way.
Okay. Collapse by how much?
Well, I mean, I can't say when or how long, but before it's done, when the next meltdown comes, it'll be 50 to 70%.
Yeah. Yeah, you told me that before, so you're sticking to that view.
1852 in the S&P is where it's going to go. How's that? I'll give you a number.
And that's because we've been overstretched in the valuations, or there's a recession, all of the above, none of the above?
All the above, and nobody's got any money, and you have too much complacency and the panic. When the panic sets in, remember, markets always go too far up and they always go too far down. And when the panic sets in and the real selling begins, it's going to be straight down. We've seen it so many times before, 87, 2001 in the NASDAQ, '08, and many little ones in between.
You don't think that this debt ceiling being raised would mean that the Treasury has to buy bonds to fill up its cash reserves again? That may provide some liquidity.
Listen, that's another ignorance about this government is they should have created a 100-year bond like everybody else did a long time ago. About 10 years ago, they eliminated the 30-year bond, okay, and didn't realize they needed it. Well, they need a 100-year bond because they got to stretch out the debt. But listen, since we're the biggest debtor, okay, in the world, what are they going to do to us? So we default. What do you think? Somebody's not going to give us money? We owe so much that nobody's not going to keep funding us. It's laughable.
Mm-hmm. So this came in from a note from a friend of a guest. Apparently, he worked at the Federal Reserve. I'm not going to quote it exactly, but basically, he's predicting that after paying its interest, revenues will cover Social Security, Medicare, and Medicaid, and the rest of the spending will need to be cut by about 50%. In any case, the Treasury will have to issue a huge amount of bonds to fill its bank accounts back up, which is what I just talked about, which will likely temporarily depress bond prices and raise interest rates. Is that something you've seen?
Well, I can certainly see that. I said I think the 10-year notes are going to 6%. I think mortgages are going to be possibly north of 10%. So this interest rate is far from over, and the Fed is far from not continuing to hike. I mean, they're nowhere near stopping, in my opinion.
Okay, so the Federal Reserve is likely going to raise interest rates some more. That may actually push down the stock markets, like you said. So you're bearish in the stock markets long term. Are there any particular sectors that you do like within the stock markets, or no?
I like energy. I mean, I think crude oil is going to go to the moon. I think don't be surprised if OPEC cuts production once again. I think crude oil is going to go well north of $100 again. So that I have no doubt. I'm a little concerned to the grain markets right now because you've got, if the U.S. is buying wheat from Poland when we're the number one supplier in the world, that's to me a fundamental problem. But that's also a problem when you have a country trying to do something that they can't do. In other words, green energy. I mean, I have no problem if they want to go green, great. But give us a plan. You have to fix the infrastructure and quit torturing American people and taking their money away while you're making promises that you can't deliver on right now.
Yeah, tell us about your oil thesis. Why do you think oil is going to go up?
Well, I think, first of all, since we're a net importer now and we have to buy from Saudi Arabia, don't you think they might cut again? They cut in April, and they pushed prices higher, and they may just cut again. And I thought they were going to cut right before Memorial Day, quite frankly. But I think that you'll see, there's a little bit lack of demand right now because the economy is weak. But I think they may cut to drive prices higher once again. They got to pay for that new PGA Live Golf tournament thing now.
Okay, $100 a barrel by the end of the year. Is that possible?
I would think so. Yeah.
Okay.
I would think so.
Yeah. Well, let's talk about the other commodities. Well, let's talk about gold today. Gold's up. The dollar's down. Why is the dollar down? Have you been following that this morning?
Well, I mean, I watched it. I mean, the dollar's been up and down. It's over par. It's over $1. It's at about 103. Look, I think that this is where the fraudulent fiat currency system comes into play because there's no backing or nothing that underlies any of these currencies other than central banks. I think it's just they take turns at pushing them down and really taking out the value because your dollars buy a lot less today than they bought yesterday. And that continues to be the case. So I put nothing into this. I know that based on what it is, it's fraudulent. And I think you're seeing that even in the United States right now. There's a lot of states that are trying to get approval or pass laws to use gold and silver as a currency once again.
Really? I haven't. Can you tell us about that?
Texas and Missouri for sure.
Okay. So what would that mean practically if those laws get passed?
Well, it would mean that they would stop using dollars and create something that has a real true value. Now, again, what is the true value of gold? Well, again, obviously we know it's benchmarked against the dollar, but if you're watching what's going on in the BRICS and you're watching what's going on right now with China, Russia, and Saudi Arabia, they're creating a different currency and they're obviously trying to take over. They're trying to replace the U.S. as the reserve currency, which they can't do yet, but they're going to continue to try, right? This has been going on for many, many, many years. And every 10 or 12 years, everybody gets a panic like they're going to replace it. Well, we haven't gone that far down yet to get it replaced, but there is some rumblings right now, and that's part of the issue.
The gold market, is that it's been hovering around $2,000 for a while, hasn't maintained above $2,000. What is it waiting for in terms of a breakout?
Well, you talk about that, and again, I don't like to talk about the dollar relationship, but the higher dollar does put a little pressure on gold. I think gold will make new highs this year. There's no doubt that I think it's going higher. I think right now you're seeing a market that's consolidating, and if you go back and look at the chart, it's consolidating at a higher level than it was last time. So to me, that's very healthy action for the long-term view of gold. The same in silver. I would expect gold to be, let's say 2,200 by the end of the year, and I would expect silver to be somewhere in the mid-30s by the end of the year.
Well, that's interesting. You're expecting silver to follow gold still, and silver not to decline because of the recession. Keep in mind, silver is being used for a bunch of industrial stuff.
Well, a lot of people use silver as a precious metal too, though, right? It's also the poor man's gold. If you're going to put some away, some physical metals, I'm a big fan of platinum as well. If you're going to put some away, then you really don't care about the recession. If you're buying physical metals to hold on to, you don't really care whether or not they go down today or tomorrow, because you shouldn't be buying them with leveraged money or money that you have to borrow. You should be buying them with cash that you would either be putting in a market or into the bank or whatever. So again, to me, I never even look. I don't even know what I have. I don't care what it costs. I'm going to hold it until I die, and my kids will sell it.
Fair enough, Todd. I'll just end on this note. I know you don't actively trade all the cryptos, but have you followed Bitcoin at all? Bitcoin's
I trade. I don't actively trade. I actively trade Bitcoin actually through the CME. Okay, they have a Bitcoin contract, and right now I'm technically shorted. Okay, but I do own Bitcoin, and I'm a big believer in the crypto space. And I think you have the Hong Kong, which is actually China, but Hong Kong now is going to have an exchange for crypto. I think all the trouble you're seeing with Coinbase and these others are the government's ways of trying to stop it, but they've been trying to stop it now for 14 years. They still haven't been able to do so, and I don't think they are. I think that we're going to see crypto is going to be a real player as we get more into trouble and you see more of this stuff happen. And I do believe that if you're like libertarian as I am, then you would much prefer to use crypto because it is a currency that is 24 hours a day without any central bank intervention.
You know what I've noticed that's interesting is that Bitcoin and the Nasdaq have traditionally been trading in tandem. They've been correlated. Now this correlation kind of broke down the last month or so because the Nasdaq has been grinding higher. Bitcoin's been flat. Is there any reason that you would ascribe to this?
Yeah, well, I think Bitcoin got a little high, and again, there's always concern when the SEC gets involved. The CFTC has recognized cryptocurrencies as a currency, okay, as a commodity. The SEC is trying to battle that, on their side. So there's like a split. So which ones are going to be regulated by the SEC, and which ones are going to be regulated by the CFTC, and that's where the rub comes. In fact, earlier this week, when Coinbase got hammered, that was the big story behind it.
You don't think that the government's trying to ban crypto because of all these lawsuits?
I don't think they can. Again, I think they can, but we're still going. And crypto and Bitcoin is still at 25,000. Okay, it's not at 10 cents or $1 or $3. It's 25,000 still. The major players in the crypto space are holding up. Ethereum, Solana, Bitcoin, they're all holding up very well. So to me, markets will dictate what's going to happen when it's all said and done.
You said you're a long-term believer of Bitcoin. You don't think have the recent lawsuits against Binance and Coinbase that you just mentioned, have these lawsuits shaken your belief somewhat?
No, I bought more.
Okay. It's interesting because
I've made a commitment, and I will warn anybody out there who plays in that field. Whatever you do invest in it, be prepared to lose it all. I mean, again, I don't know that I'm going to be right, and I'm certainly not putting my entire life at stake, but I have a sizable amount that is what I'm willing to risk if it does go to zero. But I think that I'm correct, and I think that the dynamics tell me that crypto is here to stay.
All right. Excellent stuff. Thank you, Todd. Where can we follow your work? Where can we learn more from you?
You can email me direct at bubba@bubbatrading.com, or you can go to my website, bubbatrading.com. And David, you're the best. I appreciate being with you. Thank you.
No, I appreciate your time as always. Thank you for giving us a market brief this morning. We'll get this up as soon as possible. Thank you. And thank you for watching. The viewers, I appreciate it. Just don't forget to subscribe.